Good morning. It's Wednesday, October 29th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So yesterday at this time, my phone was just blowing up with people trying to buy that dip in the precious metals market. So today we do have the Fed day here. And any thoughts on the Fed? I mean, really, does the market really even care about the Fed? What they're looking for is some guidance on the quantitative tightening that's been taking place here. They realize that the Fed is going to go on this cutting cycle here. And really, is the meeting with Xi Jinping tomorrow much more important in these markets? So the markets have already rallied ahead of the meeting with Xi Jinping, and there's a lot of optimism around the trade deal, raising the possibility of the buy the rumor in some of these markets, and then the sell the news scenario that takes place tomorrow. One of the things that I'm looking at here is in the agricultural markets. We've seen a big breakout to the upside, specifically with the soybean market. Now futures are pulling back down about 0.5%, down 6 cents. So looking at the option markets, they're expecting about a 0.8% move in the S&P 500 for the Federal Reserve meeting, and that's below the average of about a 1.1% move of volatility over the last 12 rate-setting meetings. Now looking at the precious metals markets, they're snapping back, bouncing off that 3,900 support, that 4,550 support level in the previous trading session, with futures on the gold market recapturing that 4,000 mark, up about $57 at 40.40. So low in the overnight session, 39.30. High in the overnight session here, we're just about there right now at that 40.43 level. So that's up about 1.5%. Silver looks to be eyeing that $50 mark here, up about 2% overnight. That's 95 cents, and really bouncing off that 45.50 level. So the ETFs, they did cut gold and silver holdings for 5 straight days now. So some of these people, they might be a little bit triggered by the volatility. I've had some people reach out and ask if this bull market is over, not Blue Line Futures clients, because they know how we're positioned in these markets. These are just random people blowing up my phone asking questions here. Went to the dentist office yesterday, had 5 missed calls by the time a cleaning was done. So what I notice is that when I talk to some of these individuals here, and the chances are is that their position sizing is way too big, or worse, they got too big, they grossed up near those all-time highs, which means that their initial buy was too low and they kind of exhausted a lot of their resources up near the highs. So they didn't add correctly and they grossed up near those tops. You're leaving little room to add with no real risk management in place is another thing that I ask these people. So when you see a correction like what we saw, they become emotionally triggered in their positions here. And the reality is that the bull market, it ends when the drivers end, when the structure changes of things, and it's the same that occurs when bear markets occur. So when the markets, they do become overbought, they naturally correct. And these corrections here, you look at 1 month declines in the gold market of 10%. Well, it's not really unusual. I mean, if you're a historian like myself of the gold market, we saw a 10% 1 month decline in 1970, 82, and 2001. We've seen 8-month declines in 1976. We've seen 6% in 85. We saw 2% in 2018 and also in 2022. So you get, naturally, when the prices rise higher and higher, you're going to see bigger volatility swings here back and forth. But not one of these particular corrections had killed the bull market, and the futures traded higher after. So you look at gold market, you look at the drivers of it. Have the drivers structurally changed? Well, volatility has been declining. The participation from the retail portfolio standpoint's been increasing. Central banks are still adding. Emerging markets, they're at about 16% on average for the reserve holdings in the gold market. I believe that many of these central banks want to bring it up to 20 to 30%. So there's still room to run there. We're still seeing double-digit ETF growth, although they've had 5 straight days of declines. And many of the people that trade these ETFs, I mean, I'm telling you, they'll go from one thing to the other to the other. They change their position like they change their underwear, and sometimes it's 3 times a day here. They'll be in NVIDIA. Whatever's moving, that's where they want to be at. So there is that froth that's at the top of the market here, but we'll get that in a second here. So we do still have the Fed. They are in their cutting cycle, and they're just beginning to cut. And you see some dollar strength. Well, I wouldn't be surprised to see the dollar continue to strengthen because of the fact that Europe is really falling apart here. then also you're going to see treasury yields most likely decline with the Fed, and you'll probably see US equities rally, the gold market rally, and the dollar rally all together. Now, I practice looking at this type of analysis here on these particular markets. What are the main drivers there on almost every single market out there? I mean, everything from equities to live cattle. I could tell you that live cattle was probably going to break last week when I opened up the fridge and I saw 2 filet mignons in a package I've never seen before, and they're from Australia. So there's got to be some beef flowing into this country here. So you look at the equities, I can tell you that some of the best performing trading accounts that I've seen, and I monitor hundreds of accounts. That's one of the insights of sitting in the captain's chair right here, is you get to look at what other people and what other traders are doing. And some of these clients that I've worked with, they've been clients of myself for 20 something years, and they're still actively trading on these desks. And the reason why they do that, or the reason why they're still around, is because most of them have very disciplined type of trading styles. They manage to take up their position, take down their position. They know when to step aside. They know when to pump the brakes here and take a little cooling period. They have a couple losing trades here. They reassess, are the drivers changing here? So I get a lot of people asking about the equity markets, and they're using things like, oh, this thing is overbought, the top's in. And I see the same thing on the metals markets. And really, you look at froth. Froth's not really an efficient indicator of future results. That's where maybe some overbought correction takes place once the froth comes out, like the foam on a beer goes off. The valuations, they'll say they're currently elevated. Again, it's catchy. Only a single factor model here. You look at seasonality, because remember September, they were saying that that's the worst month there, and I saw people liquidating, and then what happened? It was like the best September on record. Well, guess what? If you're an equity bear or an equity bull, November to January, those are the best months here, seasonality. So the traders are gearing up for what could be 2 pivotal days here. Sorry, too much coffee this morning. With the current rally, you've got the Fed decision, you got US-China trade talks, you got earnings from 5 of the Mag 7 companies coming out, and you got NVIDIA set to be the world's first $5 trillion public company. So you look at the NASDAQ, you look at the Russell, and when I talk about some of the drivers and things like that, you've got this technological innovation. You got the AI boom is the majority driver for the current rally. It's propelling growth in the technology sector. It's driving outsized earnings for key companies, and it's transforming many industries. I talked about that with the farming industry, how AI is taking over, at least technological advances are. You've got favorable monetary policy. We expect a Fed rate cut today. That's a 99% chance. You've got about an 87% chance in December. So we'll see what happens there. Then you also have this broadening market strength. We saw the NASDAQ up about 10% in the last 3 months. You've seen the Russell 2000, which is the most hated small caps. They are getting tailwinds. They were up about 11.6% in the last 3 months. Their earnings season is off to a 25% year-over-year growth. So you've got an abundant amount of capital sitting on the sidelines. There's $7.7 trillion. So when I see somebody say, hey, I'm getting out of my equity position, this market is way too crazy and stuff like that, good. You've just joined the $7.7 trillion that are sitting on the sidelines. Now, the reality is when the Fed cuts rates today, what happens? Those money market, those decline, those yields you're getting on there, and then that money needs to start to find a home. So where does it go? It goes into the gold market, goes back into the equities, goes here, there, there. So people begin to deploy that sideline capital. So you look at the earnings here, out of 197 S&P 500 companies that have reported so far, 85% have managed to beat the analyst forecast, only 14% have missed. You look at, so that's getting into some of the drivers of these markets. So I suggest to you, if you're trading any kind of market that's out there, whether it's grains, energies, things like that, kind of really taking it on like a non-biased approach and write down what are the drivers that have taken us on a 3-month basis where they're at. Then you could start looking at the weekly, then you can manage it day by day, hour by hour, and then take your positions and decide whether these are longer term positions, you're trying to play a cycle, are these shorter term positions, things like that. So you look at the dollar index here, the pulse of the market, the trends in the FX markets. You got the dollar up 19 at 98.64, pushing on up here. Most of the foreign currencies are weaker. Canadian dollar slightly higher here, but could be bouncing to another higher low. The Australian dollar, that's one of the firmer looking ones. They've got trade deals with China. They've got some deals going with the US for the rare earths. They're looking to be a bit isolated here on things, so that's starting to push up, and that's the only one that's green on the screen here at the moment. You look at the 10-year yields here, they're rising about 1 basis points, but after getting smoked here, and they're sitting at 3.98%, we'll see what happens once we have that Fed interest rate cut. You get the VIX. So the VIX was positive yesterday. It's at 1837. It's down 19 here. It is at a slightly elevated level on the futures side, but it's because of the fact that you get a recalibration of the equation that comes into the inputs when the S&P 500 achieves these new price handles. So when you get new all-time highs in the markets, those variables go into the calculation of the VIX here. 20 is still that most important level. We don't want to see futures jump above there because that's where the volatility really starts to pick up and people's hair goes on fire again. You look at the gold market, that volatility at 24, collapsing, getting back below 30. Getting below that last Thursday, that's when it really got crazy here with that largest one-day drop in the gold market in 12 years. They'd hit 32.95. But as the volatility comes down, you'll see more natural long-term traders come in, and some of the volatility traders, they'll leave that market here. You look at Europe and Asia, well, the European stocks, they were muted. You look at Asian stocks, they advanced. They were boosted by the technology, the AI-driven earnings growth. The MSCI gained about 0.5%. And Japan's Nikkei 225 climbing about 2% here. So you look at some things that we're looking at here today. Again, it's going to be the CME, the Fed Watch tool, as far as are there adjustments in that December meeting. 87% chance that they're going to cut 25 basis points. I'll look at the quantitative tightening, listen to Jerome Powell's press conference, but again, they're not really, I believe that they're moving on past this and are looking at some other outside things. The ETF flows, yes, gold up 17%, silver up 14% year to date, 5 straight days of declines here. Gold silver ratio, again, interesting, not actionable, but 83-1 here sitting at that last. So we'll keep an eye on that. One of the best commodities out there right now as far as having low volatility, looking at trade deals working out, looking at easing interest rates here from the U.S. has been that copper market, and copper just quietly moves on higher here. Has some bouts of volatility, giving you great opportunities to look to add and take things off and such like that. And then you got Bitcoin futures kind of hitting that pivot at 116, pulling back here a little bit. Saw a lot of traders trade that market on up here, maintaining some small position sizing here and using some of this weakness here today to add to some of those positions. So you guys got any questions? It's going to be a pretty busy day here as far as once things start to unfold. I do about 2 TV spots every Wednesday here. I'll be covering the Fed, things like that. Be looking to ramp up some of these positions in a lot of these markets. Most likely going to trim a few things off here, especially if some of you got involved with the metals here yesterday near those lows. We just want to make sure that we're right-sized given where everything is at here. So again, you got any questions? You want to open up a future trading account with us? It takes like 10 minutes here. You get one rocking and rolling here, and then we can talk a little bit about strategy. Shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.